Michael Burry warning, the countdown for the biggest stock market crash in history has begun. Wall Street investors are still in a relentless frenzy as stocks go higher and higher. They may have forgotten the risks of investing so much money in companies whose growth is not guaranteed, especially considering that economic conditions keep worsening by the day. They're truly believing the Fed will always come to the rescue, but the truth is that the days of Fed support are almost over. And when the music stops, this gigantic bubble will burst, and the entire financial world will be turned upside down once again. Today we're going to talk all about Michael Burry's warning about the biggest stock market crash in history. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. A number of renowned market veterans have been alerting about the growing risks, but so far no one seems to be listening to their warnings. They've been telling us that even though most people believe this time is different, the current bull market has become unsustainable. Bulls can stand many things, but the slightest sign that a 2% interest rate hike is coming can scare them to the core. And what many investors may be failing to remember is that the Fed has announced that it will increase interest rates by the end of the year. Based on recent estimates, analysts forecast that the central bank can hike rates by 2.2% by December, and that figure goes up to 3.5% at the beginning of 2022. Such aggressive increases will come as a result of rampant inflation. Official data points that the inflation rate is at nearly 6%. But some economists argue that the true rate of inflation that people are seeing at the stores is ranging between 11 and 14%. As the holiday season approaches, inflation will soar higher. Unfortunately, this means that the Fed will have no other choice but to sharply raise interest rates before the economy overheats. And of course, this will trigger the inevitable stock market crash no one seems to be prepared for. For years, low interest rates have propped up equity markets worldwide. They've made it more appealing to borrow money to invest in stocks and ultimately push up company valuations. However, today's valuations are far extended beyond norms, by many measures. Although many want to believe that fundamentals do not matter, the market is cyclical, and that's a universal truth. This means that at some point, valuations always come back to their norms. Or as the hedge fund manager John Hussman explains, everything that goes up must come down. That's the law of equilibrium. The speculative frenzy started when the Fed decided to suppress already low interest rates to near zero levels. That was when many new investors entered the bubble. Needless to say, when interest rates do rise, these investors won't stick around. Higher rates are also likely to create disruptions in the economy, with indebted companies struggling to meet higher interest payments. That alone could trigger another recession, but we don't even have to go that far. In essence, there's a wide range of different risks that could spark a stock market crash after an interest rate hike. But today's investors are choosing to ignore the looming dangers for the sake of higher future earnings. They've been buying the narrative that the Fed will do whatever it takes to avoid a financial collapse, and that it will keep fueling stocks through its quantitative easing policies. History has shown us over and over again that there's only so much liquidity can do, and that narrative is coming to an end, and it will cause unprecedented chaos. If you don't believe us, just take a look at the Fed's annual financial stability report, in which central bank officials issued a very explicit warning that the market is in a bubble and extremely elevated asset prices are risking to trigger a broader stock market crash. In a recent article, Bloomberg reported the highlights of the 85-page document published on the Fed's website moments after the market closed last week. The central bank warned that prices of risky assets keep rising, making them more susceptible to perilous crashes if the economy takes a turn for the worse, adding that asset prices remain vulnerable to significant declines should investor risk sentiment deteriorate, progress on containing the virus disappoint, or the economic recovery stall. This is proof that they already know what's coming next. They already know that there's no escape. For how much longer will we continue to ignore the red flags? The Fed keeps pretending for the public that everything will normalize soon, but those who witnessed previous bubble bursts are telling us that the stage is set for another massive financial meltdown. It's clear that a brutal stock market crash is fast approaching. The final question is, who are you going to believe this time? Big Short investor Michael Burry says the stock market is dancing on a knife's edge and fears he's being ignored again. Rampant speculation and widespread betting with borrowed money have driven the stock market to the brink of collapse, Michael Burry said over the weekend. Speculative stock bubbles ultimately see the gamblers take on too much debt. The investor tweeted, along with a chart showing the S&P 500 index and levels of margin debt both soaring in recent months. The market is dancing on a knife's edge, Burry added. Burry said the flow of cash from actively managed funds to index trackers and the boom in day traders sharing tips on social media and touting meme stocks had helped to fuel the market upswing. Passive investing's IQ drain and stonks group hype add to the danger, he said. In another tweet, the Scion asset management chief highlighted a massive spike in the volume of bullish call options being traded. He added the hashtags caution to the wind and blow off top to emphasize his view that those types of wagers are propelling stocks to extreme levels. Burry is best known for his billion-dollar bet on a crash in the U.S. housing market in the mid-2000s, immortalized in The Big Short. Christian Bale portrayed him in the movie adaptation of the book. The investor also laid the groundwork for the GameStop short squeeze when he backed the video game retailer in 2019 and wrote several letters to its bosses. Burry tweeted on Sunday that his latest warning was being ignored just as Wall Street dismissed his warnings during the housing bubble. "People say I didn't warn last time," he said. "I did, but no one listened. So I warned this time, and still no one listens. But I will have proof that I warned this time." Burry doubled down on his view by adding that quote to his Twitter bio. His display name is Cassandra, a reference to the priestess from Greek mythology who was cursed to share true prophecies but never to be believed. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye!